Do you think we're about to enter a trade war with China? The market seems to be worried about that. What do you say?
I think they should be worried about it. Probably the odds are less than 50%. I don't know what they are, but you know, it would be nice if the odds was zero. So in that sense, the market is right to worry about it. And it's hard to think of a better example of the clash between economics and politics. You won't find many economists that think, you know, what we should do is have a trade war with China.
So what would you say to President Trump right now?
I would say, you know, first of all, he wouldn't listen, but in the unlikely case that he would listen, I would say, you missed your best opportunity and see if you can get it back, which was the TPP that he threw away almost on his first day of office. We had 11 other countries joining us and China on the outs, and a hunk, the TPP is a gigantic thing, this big, but a hunk of it was about intellectual property protection. That is the essential issue with China. Not that we buy a lot of toys from them and they don't buy toys from us. It's the intellectual property, some people call it theft, that's the really big issue with China. And we had a chance through the TPP to make some progress.
Because it narrows the technology gap between the two countries.
That's why they do it, yeah, exactly. I mean, they're well aware that this won't last forever, but it's going to last for a while. They're well aware they're behind us on technology, so grabbing it any way you can from the leader is a good idea.
So when China comes out swinging, essentially, with 128 products, they had this list of 128 products that were ripe for retaliation. I mean, they're not just going to sit here and take on these tariffs.
I don't believe they will. Now, the list, if you add up the number of dollars, wasn't that large because, as everybody knows, there's a gigantic trade imbalance. We're buying a lot more, about 3 times from them what they're buying, or maybe 3 or 4 times what they're buying from us. But the fear, and I think this is one of the sources of the market's jitters, is that they can start doing things like selling treasuries. They own a lot of treasuries. And I've been saying for years they would never do that because it will hurt them. But when you get into a trade war, it's about I'm hurting myself in order to hurt you. And they could do something like that.
Although yields on U.S. treasuries are much higher than in Europe, so couldn't we make up some of that demand in Europe if European buyers come to us?
No. I mean, that was too unequivocal. Unlikely, right? Portfolio holders look around the world and they decide, I want to buy here, I want to buy there, I don't want to buy here, and so on. If you hold that constant in the eyes of Europeans, and you might say neutral third parties, you wouldn't expect them to pick up the slack. You get a big seller in the market that's going to drive the price down.
Now, you talk about the importance of the intellectual property issue, but what about the steel and aluminum tariffs? I mean, do you get where President Trump is coming from, that China isn't playing fair when it comes to that front?
Sure, but it's not that important. I mean, China is a huge steel manufacturer. They have overcapacity and they contribute to the world overcapacity problem, but most of the steel they use at home. If you look at Chinese steel production, it's mostly used in China. Some of it they export.
But it's still the overcapacity.
Oh, yeah.
Is dumped not just in the U.S., but through other countries,
exactly,
and then it makes its way back to the U.S.
Sure, well, it filters into the world. It's you know, loosely speaking, it's a world market, and China does contribute to the overcapacity. But this is not that big a deal for the United States of America. You know, a lot of people don't know this. On the list of countries that import steel into the United States, China ranks 11th.
Now, President Trump has Larry Kudlow in the White House. Of course, he's the ultimate free trader. Should the markets be comforted by that? What does a compromise look like in the sense that how can we stop China from playing unfair without triggering a trade war?
Well, I come back to what I said, that we should be arguing for intellectual property protection rather than arguing about steel. Other things equal, I'd rather have people in the White House that believe in free trade. But don't forget, you've got Peter Navarro around the corner and Lighthizer, and it's a very mixed crowd. And as we all know, Trump takes the advice that he likes, that play to his prejudices, and doesn't take the advice.
So bring all of this back to the thesis in your new book, Advice and Dissent.
Sure.
What should we know?
Well, it's a perfect example of this. You know, The central theme of the book is I call the lamppost theory of economic policy making, which is that politicians use economics the way a drunk uses the lamppost, for support, not for illumination. If Trump wants illumination on trade, which he doesn't, there are many places to get it. Almost every economist believes in open trade. He doesn't want that. He's looking for whatever support he can get for whacking whoever is his target of the week. You know, China. He was hitting Europe. At the beginning, he was hitting Canada on logs and things like that. So he's not looking for this for economic knowledge, for facts, for logic. He's playing to what he takes to be the political prejudices, which in this case, it's hard to get inside his head. I think he shares. Some of Trumpism, I think, is just phony, but I think he actually believes that.
Though, then how does he solve the steel and aluminum industry's troubles? Because those businesses have been decimated over the past several decades.
Yeah, he won't, is the short answer. You'll notice that he's now got an ever-growing list of countries he's exempting. So you can transship anything, including steel. So you exempt Canada, you exempt Australia, you exempt Korea, I now read. It's kind of a world market, so the steel will come into the United States anyway.
Let's shift and talk about the Federal Reserve. Obviously, you're a former vice chairman there. Markets are worried about potentially a faster pace of Fed rate hikes. What would you tell Jerome Powell right now?
I would tell him to be nervous about what's happening in the administration, but to go slowly as he is. He said that. Well, if I tell him that, it's no news to him. He's already said he's going to go slowly. There is a danger from the fiscal stimulus in a fully employed economy to overheat the economy. I think it's a modest danger, not a gigantic danger. There is and that would call for faster Fed rate increases, and they're ready to do that if they need to. There's also a danger from a trade war. We'll see what happens with that might require some adjustments to the Fed's policy. And then there's always et cetera. Things happen that you're not expecting.
Well, because there is worry in a few years' time from now that the tailwinds from the fiscal stimulus will subside, central bank stimulus will subside, and that could be a perfect storm for a recession. What's your take on that theory?
Recessions are basically not predictable. They do happen, and this expansion, as you know, is very long-lasting at this point, likely to last a while longer. It's a fallacy that recessions die of old age. Some people think that, but they don't. They die for a reason. Something kills them. It's often, to your previous question, Federal Reserve tightening monetary policy, or it's an oil shock, or in 2008, we know it came from Wall Street. So something happens to kill an expansion, and something will kill this one eventually, but it's not really on the horizon, and it doesn't have there's no time dating, right? This expansion is not going to expire by a certain date.
So we shouldn't get too worried that, 9 years counting, the clock is ticking.
No, it's not. In some literal sense, it's ticking, it's counting time, but there's no reason to think that because the expansion is now 9 years old instead of 6 years old, it's much more likely to end.
All right, well, fascinating stuff. Alan Blinder, thank you very much for your time. Again, the book is Advice and Dissent, Why America Suffers When Economics and Politics Collide.
Thank you.